Hi, dreamers. You're going to love this one. Why? Because there's major portfolio updates, and I'm going to go through it a little bit differently this time to point out highlights. Plus, at the end, I'm going to feature one of you with an inspiring story and picture with him in his very own Dividend Dream hat. His story is so inspiring. So let's get to it. Today I'll show you my new dividend patty as of March 2023. Okay, so this time we're going to do it backwards a little bit. I'm going to start with how diversified this portfolio is that I'm about to show you. So what you're going to see is that I've got 25% in consumer staples, I've got 17% in communication services or telecom, 4% in utilities, 10% in REITs, 9% in IT, a tiny bit in industrials, about 6% in healthcare, 12% in financials, 2% in energy, and here's the real difference, 15% in ETFs. This is the major shift in my portfolio, which you're going to see. And I've taken a little bit from each of these other places of the pie in order to fund this, in addition to new funds. So I'll show you the detail in a minute. But I also wanted to show you the geographic diversification. And this is virtually unchanged from what it has been, with 67% US, 18% Canadian, 10% UK, which is essentially mostly BTI, and 5% international, which is essentially Philip Morris. All right, so let's get to the detail. So what I'm going to do this time is quickly orient you to this spreadsheet, and then I'll go through in detail a few sections and then highlight the big changes. Every time I do one of these, there are some new folks who have never seen this before, so it's important to orient you first. But there's also a lot of folks who have been following along for almost a year, so I don't want to really belabor the detail either. So what you'll see here is the ticker symbol, the description of the stock, how many shares I own, the last stock price, which was the end of the day, March 17th, and if you recall, a very brutal week. So everything was pretty down, hence the nature of a snapshot. You've got the next X date coming up, which is the date that you need to own the stock by in order to get the next dividend. Next pay date for the dividend. You've got the current dividend yield, the estimated annual dividend income, the sector that the company is in, the geography, and then this is a favorite section that I've added. It's whether or not this company is a dividend king with over 50 years of paying out consecutively and increasing dividends, whether they're a US dividend aristocrat with over 25 years of paying the dividend and increasing it, a dividend contender with between 10 and 24 years, a Canadian dividend aristocrat, or whether they're considered a UK dividend king. So let's dive into the first couple in detail and then we'll go quicker. Getting into number one pole position recently is BCE. I've got 3,462 shares. The next payout is in about a month, which I'm very excited about. The yield is currently 6.48. I've got just over $150,000 worth, and it pays me $9,789. And as you can see, it's a Canadian dividend aristocrat. And so the next one I've got is ticker symbol MO Altria with 3,195 shares at almost $145,000, and it pays me just over $12,000. And Altria is a dividend king. So let's continue through the top 5 and then I'll start highlighting other parts of the portfolio. The next one we've got is BTI, which I've been really liking the numbers lately. So I've been adding a little bit of BTI over the last couple of months. I've got 3,751 shares. It's got a 9% yield, $134,000, and it's generating over $12,500, making BTI my number one contributor to the patty. And we've discussed in the past that BTI is subject to currency fluctuations. So that's something to be aware of if you're going to own BTI, as it's UK based. But there is some discussion about BTI's headquarters moving to New York, which in my view would be a huge benefit to shareholders. So that's something to keep an eye on in the near future. The next stock I've got is IBM. I've got 714 shares, which is just over $88,000 worth, and it generates $4,712. And the last position in the top 5 is a REIT, It's my favorite REIT, ticker symbol O, Realty Income. I've got 1,170 shares. The current yield is 4.9. The value is just over $72,400, and it generates just over $3,500. So in the next three, you can see mainstays that I've had for a very long time. Philip Morris generating $3,700, AT&T generating about the same amount, and Pfizer generating about $1,700. But these next two are rounding out my top 10, and they are definitely new to the top 10. And you probably know, because if you watched my recent high yield video, why I am making this change and why I'm adding these to the mix. I'm doing it because they're adding a cash layer to my already steady and growing dividend portfolio. So here you can see JEPQ at 1,096 shares at almost a 12% yield, about $47,000 worth, and it's generating almost $5,700. Then you have Devo, which is one of my absolute favorite ETFs. I've got 1,232 shares at $42,000 worth, and it's generating about $2,000. Now, I go over this in detail in some of my other videos, but the difference between JEPQ and Devo is that JEPQ is based on the NASDAQ, and although it'll get some upside as stocks recover, you really shouldn't expect too much more than the cash flow that you're getting right here in this yield, as opposed to Devo, where you're getting about 5% yield monthly. And by the way, both of these are monthly, but you're also able to get a lot of the upside from the dividends in Devo. So long term, the total return is kind of nice. So those right there are some of the big changes in my portfolio. All right, let's take a look at the next 10. We've got BNS, 762 shares, generating about $2,000. MFC, Manulife, generating about $2,000. Verizon, almost 1,000 shares there, generating almost $2,500. I've got AbbVie, generating $1,341. And this is a relatively new one here as well that I covered in my high yield video, PTY. Now this is a bond fund, which I'm typically not a huge fan of bond funds. But once again, I think bonds and bond funds have been beaten up significantly. So I've got about 3,000 shares there. It's generating a whopping $4,360. And I do think that I'm going to see some appreciation here. And to round out the top 20, I've got about $30,000 in Duke Energy, almost $24,000 in Avgo, which is a growth play. SCHD, which is probably my top rated ETF, 328 shares there, generating about $1,000. Ben, 863 shares there, generating about $1,000. And then another ETF, BST, which has been also beaten up significantly based on the science and technology holdings that they've got. So I'm excited about seeing the rise in BST. Got almost 700 shares there, generating about $2,000. Now, one of the things I wanted to point out in the top 20 is just how many of these are actually, other than the ETFs, Dividend Aristocrat, Contender, Canadian Dividend Aristocrat, or UK Dividend King. And check this out. Of the top 20, 15 are Dividend Kings, Dividend Aristocrats, Dividend Contenders, Canadian Dividend Aristocrats, or UK Dividend Kings. But you can see here that 5 of my top 20 are ETFs and can't be categorized that way. And so in other words, of my top 20, every single one of my individual dividend stocks qualify as being a company that has consistently paid out and increased their dividends. And that's a key piece of my growing dividend portfolio, and one of the things that I rely on in order to fight inflation. In addition to adding in some diversification in these ETFs that also act as a cash layer with higher yields. So you can see a little bit of the strategy change right here in the top 20 as I really seriously think about living off of these dividends. Okay, so this is really the engine, but let's take a look at the rest of the portfolio. After BST, we've got WPC, which is a REIT, and I've got about 17,000 there. BDJ, another ETF, about $16,000 there, and that's got a nice 8% yield. I've got STWD, kind of like a financial REIT, at $1,900, and that's been a long-term hold for me. I've got IAPR, which is one of my most speculative holds, generating about $1,500. And then I've got CVX, which if you've been following me, you know I sold off a bunch at the end of last year at about $180 a share in anticipation that that was a little bit of a short-term peak. And so I may actually roll back into CVX in a little bit as oil continues to tank and decline. And that's just a cyclical pattern that typically happens with oil. So at the current moment, only about 100 shares, just enough for me to write some options on. And it's generating about $600. Then I've got CFG generating $800, Stag, another REIT, generating about $600, Southern Company generating just above $500, Fortis, which I've been trying to build up lately, also generating about $500, and then Sunoco, which is kicking off about $1,000. Looking at the next 10, getting us to 40 positions, we've got BMO, which I've been slowly adding to lately as the Canadian banks and the entire banking industry is getting a little bit unfairly hammered. So that's an opportunity for me. I'm now up to 140 shares and it's generating about $600. I've got about $12,000 worth of Pepsi, generating $300, $10,000 of QQQX, generating about $742. And then this TQQQ is really only something that I hold in order to write options against. So I've got 400 shares there, not generating cash in terms of dividends, but again, really I'm using that just for the options. I've got a UK-based financial company, JHG, $600 there. Texas Instruments, which is an incredible company, $10,000 there, generating about $250. Public Storage, fantastic company, $8,000 there, generating $320. Prudential Life, generating about $470. SLF, another financial company, this time Canadian, also another opportunity that I've been taking to buy and add to. Yield is about 5%, which is fantastic, $350 there. And then another pretty speculative position for me, MPW. And this is a medical REIT generating about $1,000. And this is another one I've been writing a lot of options against. It's a short to midterm hold for me, and so we'll see how it does. And let's move into the last sections. Now, I'm not going to go through so much in detail from here on out because there's about 33 more positions. And as you can see, each one is going to be below 5,000. So you can see what they are here. We've got MetLife, GSK, JEPI, Procter & Gamble, Getty, Canadian Imperial Bank, SJR, which is a Canadian telecom company, FRT, one of the rare REIT dividend kings, paying out and increasing for more than 50 years, which is incredible. I've got Microsoft, Qualcomm, EBF, Tullis, UPS, Apple, McKesson, Abbott, Cisco, a bond fund that I've been holding for a while, just kind of in the background, Nextra Energy, Apple Hospitality, and finally United Health, Cintas, Prologic, ORI, Mondelez, Bristol Myers Squibb, Cardinal Health, SoFi, which is also something I just hold to write options against, Genuine Parts, ADP, PFG, Toronto Bank, and Royal Bank of Canada. Now, some of these small positions are ones that I'm holding just to start a position in, but the real reason why I hold all of these little ones is if you were to actually take this and add up everything that I have under $10,000, what you get is about $134,000 invested in about 40 stocks. And so what I'm doing there is what I call the long tail. I'm creating my own ETF, if you can think of it that way, by blending together all of these individual picks, which another way to think about that is that if you put all of those together as an ETF, that would be my fourth largest position. So that's one way to think about it. Another thing I wanted to point out is of the 73 stocks that I hold, how many are actually considered a contender, aristocrat, or king? And the answer is about 41. So you can see that my portfolio is really packed with companies that have proven themselves over the last 10, 25, and even 50 years. Okay, so let's get to the final. Let's get to the total. What is my patty? Going all the way down to the bottom, here it is. My total new patty. I've got 38,609 shares. with an average yield of 6.5 and a total portfolio value of $1.472, $455, and a new dividend income of $95,785.70. And here you can see the change from September at $81,600 and then December at $83,200. I'm getting closer, guys. Only about $4,000 more, and I will hit that $100,000 a year dividend mark. Okay, finally. I'm so excited to do this. You have no idea how excited. Oh my God, this made my day. So check this out. I get an email from Carrie, who is Irish but lives in Alabama, with this incredible picture of him in a Dividend Dream hat. Oh my God, I love it so much. He says in his email, "Hello, Dream. Your story has truly enlightened me with the opportunity dividend investing offers. The stock market was never my forte, and my mother was a child of the Depression. All my life, she drilled into me the stock market was the devil. I never gave the stock market a fair chance. My mother was a CD investor. Guys, does this sound familiar? A family that didn't know investing. So where are you supposed to get it from, if not school or family?" So true. Okay, he goes on. "I realized in May of 22, there was a way to make money work for me. I think I finally shook off the notions that stocks were bad. And in 2019, after 25 years, I retired from my job. I was young-ish at 52. And within 2 months of retiring, I actually went back to work making more money, plus I had my retirement." Wow, that's amazing, Carrie. So he says, "Suddenly, I had a lot more income. And it took me about 16 months to get into the groove of life, and then it kind of hit me. This dividend thing. I studied, I watched YouTube, and I opened a brokerage account and bought some stock based on good suggestions like T, KR, PEP, QYLD, SCHD, and O, and a few more. And then suddenly, within a month, ticker symbol O paid me money." What? What is this? I was hooked, he said. It was around July I came across a YouTube channel called The Dividend Dream. I waited to skip the ads, and then, whoa, who is this voice? Oh my gosh, I'm blushing a little bit. Okay, back to the story. Needless to say, I was listening intently, and it didn't take long to see this voice knew what she was doing. I had to go back and binge past episodes. Yes, I said. This suddenly all makes sense to me. I have not been disappointed with my stock choices based on your insights into CAGRs, betas, and yields. In one video, you talked about your rules for choosing a company. It did, does, and still makes great advice. Oh, Carrie, that's so great. Hey, maybe I should redo that video because it's kind of an old one, and I think it would be actually great for all the new folks here. So that's great feedback. I'll definitely put it on the list. And he goes on to say a couple more things. One is, he's even doing multiple income streams. He has a shop called Urban Famous on Etsy and another company called Silver Plate and Spoon, where he makes crosses from old silver plate flatware. That's amazing, Carrie. You are killing it from all angles here. Now, here's his final note. And guys, this is my favorite part of the story. Are you ready? He says, "Oh, one last thing. Your hat. I love mine. I wear it almost daily if I'm not washing it. Please keep doing what you do on YouTube, Twitter, and Instagram. I love the content." Carrie, you wear my hat almost daily, Carrie? No wonder it looks a little faded. Oh my God, I could kiss you. This whole thing, this whole email is exactly why I started this channel, to inspire, to join the club, to be part of this journey with me, to start your own journey. We can all win. We can all support each other. I want to inspire you to change your life like it has mine. And guys, if you've been inspired and you want to be featured, please send me an email too with a picture of you with your Dividend Dream hat on. I'd love to feature you. Let's inspire each other. Okay guys, well that's it for today, and I hope you enjoyed this dividend income update. As always, I encourage you to do your research, then implement and learn by putting it into practice. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.